Good afternoon, everybody. What's going on? What's up, team? Do we have any guests that are still here that made it through the whole day from Benzinga this morning, or did everybody bail? There's one. What's up? What's up, Jim? What's up, Kelvin? I have access to actually see who's sitting in here, so I can see that there's a bunch of you. But I'll see who's brave enough to say hello. What's up, AC? AC 2000. Good to see you. Good to see everyone. All right, let's just jump in. I'm broadcasting here in the VTF. I'm also live on my YouTube channel. So if you're new here, it's called Derrick the Trader. You can look it up and give it a subscribe and a follow. I live stream every afternoon meeting. And because I'm live streaming on YouTube, I'm required to give this disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA-SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure here, I liquidated my Palantir position today. Got a pretty decent move out of it. I'll look to get back in on a dip. I probably against my better judgment, keep a little bit of this coin. I'm annoyed at myself on how I traded this thing a little bit today, but I'm happy to talk about it because we don't always trade perfectly all the time, and when we don't, it's something that we can learn from. So let's go over to the charts. By the way, today is Tuesday, November 28th. How did the market close? SPYs closed up 0.1%, the Qs closed up 0.28%, called a quarter of a percent, and the IWM underperformed. Russell was down 0.4%, so another day of underperformance from the Russell. You know, the intraday chart, it's similar price action as to what we've seen within this consolidation period on the daily chart, which can be a little bit frustrating at times, though it is exactly what we've kind of been expecting for this week and really for last week and this week. I've been primarily expecting rest, correction. Correction can come via time or via price. While I will do better at a price correction P&L wise, most likely based on how I'm still positioned in this market, I don't hate the time correction. I can make some money in it on those trades that I have on, and I would argue that the time correction is probably the more likely situation. But you can see here the intraday price action, the SPYs I still have up. We can look at the Qs, we can look at the IWM. Maybe not as like I know yesterday was technically an even tighter range, but yesterday we had those very loose movements in the market. We still had some of that today. We still had some of those really loose movements in the market today, but overall it was just sloppy action. You know, really weak morning. Just when you think, based on this technical pattern here, coming into 10 a.m., this is a bearish technical pattern that maybe this market can break down a little bit further and we can get a little more corrective action on our daily chart. If the intraday breaks down, we snap up into these moving averages, okay, fine. We give what turns into like a 15-minute time correction. That's what I call this here at 10:20. If we looked at a 15-minute chart, you would see that this tail here is going right into the 80 MA on the 15. So that's normal healthy price action, but you should be seeing a pivot down either here at 10 a.m. or just after 10 a.m. to continue down, or if we do get that 15-minute correction, a pivot down at 10:20. Instead, we break higher, we fill the gap, and then we overshoot to the upside. Now all of a sudden, things are technically looking even better here to the upside. You get this beautiful little pattern here between 11:20 and 11:30. This 5-minute breakout candle, 5-minute rest bar, 5-minute continuation. We kind of call this a 1-2-3 play, especially when we see it on a daily chart, but it also does apply on a 5-minute where you get ideally a pickup in volume. This pickup in volume is small, but it's there, followed by a 5-minute rest bar and then momentum continuation. Things are looking good. The SPYs here, actually, we're getting very near to stopping me out on my U-Pro short position because, as I've told you guys, I've gotten a lot heavier on my U Pro and T Triple Q short positions kind of since Wednesday there a little bit. Um, but if we break that Wednesday high, my plan is to downsize very significantly, if not get out entirely. We got really close to doing that. The Wednesday high is 456.38. Today's high is 456.27. So I was almost getting ready to kind of hit out here, and then the market rolled. The market rolled, and it rolled heavy, and it rolled all the way back down. This is a nice failure candlestick here at 12:30. We get back below 455. The Treasury auction hits at 1 o'clock, which sends us down further, but never gave any actual follow through, and then sloppy choppy the rest of the day. Qs, similar story, though maybe not actually as strong as the SPYs. I think the SPYs at a certain point were helped by the Dow. The Q high of the day today is much further away still from Wednesday's high, which again felt like a little bit of upside capitulation to me, at least on a smaller time frame for the market. So it's one of the reasons why I've been a little bit heavier while I've been looking for this time and price correction. But the fact of the matter is, as we look at the daily charts, and this is the name of the video today on my YouTube, is time is a bull's friend. The more we go sideways up here, the more bullish this market becomes. We've spent a lot of time talking in recent afternoon meetings about measurements of extension, and how, the most straightforward way that I like to look at extension is just where the market is trading on any time frame versus where the ADMA is on that time frame. And we've seen very consistently over the course of the last 2 years that whenever the SPYs or Qs get $10 or more away from the ADMA on its daily chart, that you are in extreme extension, and you're basically getting a move in the other direction almost every time, really until November. November's the first time here where we didn't get any price correction at all, and the couple times that we became $10 extended, it's been entirely a correction through time. So what I've noted in kind of this most recent extension period here that goes back to last Wednesday is, you might get extended by $10 away from the ADMA on the daily chart, but $10 of extension on the ADMA from the ADMA on the daily chart is now actually significantly more extension, because this move has been so big that the spread between the 8 and 21 EMA has really widened out. And also, I don't look at weekly charts that often, but you've got a decent amount of extension on a weekly chart as well after the insane move over the course of this month of November that also needs to be eventually corrected. So that's all led to a thought process for me after we've gotten more of this upside capitulation here. At least that's what I thought it was on the small time frame on the morning of the 22nd, that the ADMA on the daily chart catching up to price, or price catching up to the ADMA on the daily chart, might actually not be enough this time. And we might need more correction than just the ADMA to allow this 21 to catch up a little bit, to allow the ADMA on the weekly to catch up a little bit. So that's what I keep kind of looking for to see if it's going to happen in this market. But yet we keep holding in. Each day recently, as we've been in this, tight consolidation, just scrolling back here over the course of the last 4 trading sessions, we've been very pinned around this SPY 455. Every time it looks like this market wants to break down, it bounces back. Every time it looks like it wants to break out, it sells back down. I mean, that's the definition of a trending market, of a sideways market, of a trendless market, is when you're in a range-bound environment, every time the market looks the worst is when you move higher, and every time the market looks the best is when you actually move lower. And this price action just makes a lot of sense right now, because we've got this, really extreme upside extension that we've been dealing with on our daily chart or weekly chart, like I was just explaining, but we still have a lot of strong flow that is in this market. I think I saw in the Goldman Sachs institutional note that the pension rebalance could lead to like $9 billion, I think was the number, of selling in the equity market. But we're still in an environment where there is $5 billion worth of buybacks coming in on average per day. And that's going to begin to roll off a little bit in Apple just down ticked over $1, huh? That's going to begin to roll down a little bit, that buyback number, as we come into December, and some of these stocks begin to come into their buyback blackout period. But you still have those flows going on We did see that I think the vol control and trend following funds bought $22 billion worth of SPX in aggregate last week, which is a huge number, and obviously also helped the market hold in. But that number should be significantly. It's still there. They're still buying, but I think that's down to like expected to be $8 billion or so, probably depending a little bit on the market scenario over the course of this week. The CTAs went from net short to net long, and like I said in the morning meeting, the CTAs, according to Goldman's data, did the most amount of buying in the month of November compared to any other month in their data set since they've been keeping this. So again, the point is that the flows are still there, they're just reduced, and I don't know if it's enough for the extension where we're at, any selling that comes from that, which is really that type of selling is usually more like overhead supply as opposed to aggressive selling. So it helps to keep a lid on the market more than it necessarily creates a pullback. And that is, I guess, in conjunction with the pension rebalance, which should see some equity selling, but so far it doesn't seem to be enough, not applying enough pressure. So what that turns into is it builds out the technical shape that we're seeing, which is a bullish consolidation. We're in a bullish consolidation pattern for the market. The more time that goes by where we move sideways here, the more likely that, I should say, the less likely it is that we'll get that price correction down to, and all I've really been looking for is a price correction down to like the upper 440s in the SPYs here, or maybe 450. But the more that we move sideways here, the less likely that becomes, and the more likely it becomes that we actually continue. I think that continuation, when it happens or should it happen, looks very different though than what we saw in the month of November. I think that it looks more like an upside grind in this market. Maybe it looks a little bit more like an actual trending market, like what we saw back in the second half of May, June, and July, which this environment here was a beautiful uptrending market full of opportunity. That's actually been very different from this month of November, which I've complained a little bit about. I can't complain too much about it because we saw it ahead of time as a team, and giving myself a pat on the back. It was the longest I've been in like 2 years or so, I think, on the last day of October. So it didn't really matter that this didn't give a lot of new setups on the way up because it was basically vertical. It didn't matter because I was so long. But the complaint that one could make about this month here over the course of November, at least if you're looking at a daily chart on the SPYs or the Qs, is this move higher actually hasn't been full of opportunity to trim some stock and then get back in at lower prices, or to get heavier at pivot points or things like that, as opposed to, again, this more normal, if you want to call it that, trending environment that was in May, June, July. You move up, you get a beautiful bear flag, the ADMA catches, and you get continuation. You get extended, $10 of extension, you get price correction into equilibrium, you pivot, you continue, you get back to resistance, you pull back to equilibrium, you create a higher low, you continue, you bull flag, this one might have been a bit tricky, you continue. That's an environment, I think, from a big picture trading perspective, that actually gives a lot more trading opportunity than the environment that we've actually been in, which has just been an environment of, were you already long, or are you a pure momentum trader where you really don't mind buying high to sell higher? And I'm a little bit mixed myself. I'm not afraid to take momentum style trades like breakout trades, but I also would say that I don't like to chase price, because chasing price, even when it works, generally leads to worse risk reward setups. So it just doesn't pay me as well as a general rule. In this environment, you've really had to just take those momentum trades for continuation over the course of the month of November, at least until the last, couple weeks here. The only exception was the 20th, which is funny because it was on that morning that I came out and I did the morning meeting on the 20th, and I said, I think that the momentum buying is done with this market, and we're going to go into a grindy environment. And I've been right. It was just that was the one day where we actually saw one more real day of kind of upside momentum. So that's still what I think. I still think that as the time correction continues, and I think that we need more of it to satisfy this 21 EMA a little bit and satisfy the weekly chart. As that satisfies itself, then eventually we may find ourselves into a more of an upward grind environment as opposed to an upward momentum environment. That's what I'm looking for. I'll call that intermediate time frame. Small time frame, I'm still just trying to be positioned properly to take advantage of this corrective action. And again, I would be happy to get a deeper pull on the Qs or the spies, kind of more into that equilibrium area. It'll be better for me, I think, from a P&L perspective. But I don't hate kind of working the range back and forth either. I mean, I can just show my one chart here real quick that has my executions on TQQQ, and you can see I've got buy and sell dots all over the place. But I'm just kind of working intraday around this core position where I lighten up and I buy back stock into the down moves, and then I get a little bit heavier again into the up moves. I reshort that stock, and then I buy it back, and then I reshort it, and then I buy it back. So I'm able to, as we continue to move sideways here, as long as we don't break Wednesday's high, make money every day in this environment where I'm putting some money in my pocket, where this is definitely better than if we just immediately broke that Wednesday's high and I had to stop myself out. But it would still be better for me if I could actually get a real price correction. I had put into my note in the VTF this morning some kind of broad levels that I would love to dip by if we could actually get the price correction, the spies or Qs. It just doesn't happen. I mentioned Apple 186, 187 area. We didn't get it yet. Microsoft just made new highs today. Bullfly continuations. Microsoft actually looks beautiful. But in a market price correction, maybe I could get a stab at 370 in this thing. Amazon 145 area. Google actually did buy real small today, around 136-ish, but I liquidated that position into the close. It was real small. But I've got a little bit of a wish list out here of names that I would like to be able to build back into if I get the dip opportunity. Like I got in Palantir. Palantir did a little bit independently to the market, but Palantir pulled all the way back into this 21 EMA area. I had fully liquidated my position into this move, and I said, okay, here finally, and this was yesterday, I said, I'm gonna buy back into some stock around $19 and below, and then I liquidated that into today's move. So I liquidated my Palantir position today. It wasn't too heavy, but it was enough to give me decent little bit of P&L in it. So I think that's kind of the big picture stuff. On the small picture for today for trading, I tried Alibaba. I don't know. I might be in my own head here a little bit, but I think that the price that Alibaba is trading at right now is I can only describe it as absurd. I still have this chart up. Actually, as you can see me getting shaken out here. So I bought a little bit of a core position, which I said was like a early cheat because I needed a break of $76 as confirmation. When this tail came in right here, I took a heavier add, but I was only giving it to the low of that tail. I got stopped out of that heavier add by like a couple pennies, unfortunately, because then the thing worked up. I didn't have as much stock then to be able to sell into the up move. I only had my core position. I decided just to liquidate that core position into the close. Alibaba actually closed pretty well today. This is a good side, kind of a good little doji type of candlestick. It was able to, albeit very barely, recapture the level on a closing basis that it broke down from. I think it looks decent. The main reason why I decided not to keep it, the position is small, and I honestly still have a lot of this JD. JD is one of my, it's like almost my heaviest position that I have. I don't think it's exactly my heaviest, but it's almost my heaviest. TQQQ is actually my heaviest short. Yeah, there's that, and then the one that I'm annoyed about myself on, in full disclosure, is coin. How I traded coin today. It got brought up in the morning meeting today. To look for like a coin RDR trade back through yesterday's high, just because of the extension, just a pure extension trade, right? You're at day like 1, 2, 3, 4, 5, 6. Today's like a day 7, I think, for the stock. Maybe you could argue that today was a day 4 if you count this rest day, this inside day here on the 21st, which, by the way, was also the holiday trading session, so it's hard to count that. But if you count this as a rest day where that actually resets the stock up, I could see that argument. In which case today's a day 4. A day 4 is still a lot when you're looking at a stock that is the slope here is actually going parabolic, which we know is unsustainable. Moved from $100 to $127 over the course of just a few days here. I think it made sense to look for that counter trend extension short today. But what I very specifically said in the morning meeting today and yesterday, sorry, just give me 1 second here. I got filled on something and I want to watch it. Okay. You know, what I very specifically said in yesterday's afternoon meeting, because we were talking about Roku, which has also had just an insane move. It was actually probably the easier short today, even though it also closed really well. And then again, you know, this morning when we were kind of looking at coin, this is the hard money. This is the hard money. Go and short this stock. You can make money doing this. Guys make a living counter trend, but it's the hard money. It's the worst risk reward. I prefer to trade with trend and with momentum because the reward side on my trade is so significantly better, and it tends to be less stressful with less headaches. Again, it doesn't mean that you can't make money shorting extreme movements in markets, but the one that I always love to bring up, because I think it's just such a fantastic lesson, and because this is especially true when you're looking at individual stocks. It's less true when you're looking at the market itself, but it is very much true when you're looking at individual stocks. The one that I always like to bring up as a warning for our counter trend traders is JKS back in 2020. This move in this JKS was just absolutely insane. You know, the stock here was in a range, it had a base, whatever. Maybe the resistance of that range is like $23.50, $24. And on, you know, increasing volume here, probably starting on this day here on the 18th, but the volume really picked up on September 21st, 2020. The thing breaks out. And it does what stocks do when they break out. It continues. It gives continuation. And you could easily, by this day here on the 23rd with this big volume, say, wow, that was a big move. The stock is really extended. I want to come in on the other side. The stock just broke out at, you know, the stock really just came from $19. It broke out at $23.50. And now 3 trading sessions after the breakout, it puts in a high at $34. That is a huge move. And you say to yourself, it's gone up too much, whatever that means. The stock is extended. I'm going to come in and short it. And it actually gives you 1 rest day, which again is really technically a setup day. This becomes a 1, 2, 3 play. After that 1 rest day, look at this move. 1, 2, 3, 4, 5, 6, 7 trading sessions before even giving another a rest day. And that rest day is barely anything before giving a massive continuation day here. So it's like, yeah, you know, the stock is extended at 34, and then it's even more extended at 40, and then it's even more extended at 47. It's even more extended at 56. You get 1 more little rest day, followed by another monster Maribozu here that makes the stock even more extended at 63. It's going more and more parabolic. Look at this final blow off top before it actually peaks out. It's at $90. And this isn't like, fine, I know it's JKS. This isn't, you know, Apple or the SPYs, but this also isn't like, what was that stupid low float name that went to like $3,000 or whatever? That I think it was like a Taiwanese or Chinese company or something that I think it started with an H. I know at least some HKD. Yeah, this is no HKD, right? Yeah, this is not a low float HKD. This is more like a real company. This is a company that, you know, you might actually trade somewhat regularly. And what this is the exact same exercise, but I guess with a different name, that I did just in yesterday's afternoon meeting. Look at this chart in JKS. Would you rather be long or would you rather be short? Obviously, you've got the gift of hindsight here, but you never knew. I should say you always knew throughout the entirety of this move that the trend is higher and the momentum is higher. It's just the easier move. And then if you follow my reward maximization strategies that I teach in the training program classes in this JKS, let's say instead of trying to fight to the short side, you were just long from this 1-2-3 play here or from the breakout, whatever it is. You probably would, if you bought the breakout at 23.50, you never would imagine in a million years that you would be looking at the stock at $90 a month later in just a straight vertical move. You would never imagine it, but you don't need to imagine it. If you have a rules-based trailing system that you follow no matter what the situation is, you can catch almost this entire move, right? And again, when you're talking about risk-reward, what's the better trade? Just being long the stock, having no idea where it could end up, knowing that upside ceiling is kind of relatively unlimited, or saying, you know what, the stock's extended, I'm going to short it for a retracement to the movement down to the ADMA. Obviously, being with the trend and with the momentum has a significantly better overall risk-reward profile, and it's also going to be less stressful. You're going to have a higher probability on your executions than trying to come in on the other side. And again, that's not to say that you can't, in extreme situations, come in on the other side and make money. I do it. I always give Pat here a ton of credit for it. Pat's really good at it. He's really patient. His execution on it is really good. I personally actually tend to be a little bit early when I come in counter trend on some of these trades. But the point is, it's just so much easier just to be with the trend. Or if you're looking at a coin like this and you're saying to yourself, I can't allow myself to buy this. Sure, the momentum is higher, the trend is higher, but I can tell you for myself, I'm never buying coin today. I'm never chasing a day 4 at $125 with the ADMA at 112 and the 21 EMA at 100. I'm never buying that. I would say for my own trading, and everyone needs to understand what their own edge is in the market. If I bought $125 in this stock and I sold at 128 and I made $1,000 in the trade or whatever, I would say that that's horrible trading for me. Horrible trading for me. I would say, what are you doing? This is not how you make money. Because even if you make money in that scenario, this goes back to what I was saying earlier about chasing. When you're chasing stock, you are giving yourself a bad risk reward. I want to be involved in the actual trade setup. I want to be involved in buying the breakaway gap, and I think we might have even talked about this on the 20th, the breakaway gap above $100 in this thing, and then have a trailing technique that still enables me to have a little bit of stock when it's at 128, even if that's not what I was expecting. I can have reward maximization rules in place that I'm still in this thing $28 later after buying the actual setup here, which was a breakaway gap, or 2 days later by buying the 1-2-3 play. That's the long that I want to be in. And then instead of actively fighting it to the short side or having missed a $25 move and then trying to chase to the long side, I would rather do nothing today, or I would just be rather, watching my P&L continue to move higher that I still have from $100. That's what I consider to be really good trading. And that's me when I'm trading at my best. Again, I can make a few bucks on the short side in some of these extension trades, and I certainly do, but I tend to often find, as I look at what my P&L is in coin right now, which is basically flat. I traded a boatload of stock in this coin. I was up a bunch of money in it at one point. I was down even more than that at one point. And, net after trading a boatload of stock, a lot of concentration, a lot of headaches, fighting this thing on the counter trend side, having my P&L finish flat. And I would honestly say that I traded it really well, all things considered. There might have been one spot where I should have stopped myself out a little bit quicker on one of the trades that I took. Even trading it really well, I can't help but ask myself, what the hell was the point of trying to fight this trend? And again, look, there was a good trade early on in the day to the short side. It really wasn't that bad of a counter trend trade. We said that this tail low is important. That tail low broke. We said that $120 here would be the next target. It got to $120. It bounced off that. Almost never looked back since then. We were trying, and this was a very difficult trade, but we were communicating another short here at like 12:30, which near the top. But honestly, I had like 3 wrong trades in a row of trying to short, and Pat described the trade at one point, I think when he was still on the radio around noon, that trade where you break the new high and you short back through that high on the way down at the stop loss at the new high. It's kind of like a small time frame RDR type of trade. I tried that like 3 times before it actually worked one time. It eventually worked here on this bar on 12:30, and it's like you're absorbing losses and absorbing losses and absorbing losses, and that's assuming that you're actually disciplined enough to consistently manage your risk and stop yourself out over and over and over again, and then when you finally catch it, it's like you're just making back the losses. Even if you get a great risk reward overall on a counter trend trade, which again inherently has a more limited reward profile. Even if you catch a nice 5-to-1 risk reward trade there, is it really making up for the fact that you just got stopped out 3 times in a row on this thing? So it's like, I mean, look my trade executions in coin today. This is insane how much I traded this stock, right? I traded like an insane person, and my P&L here, I'm looking at it. I'll just go ahead and say it. The compliance department doesn't want me to ever say my P&L or my sizing on the radio because it violates compliance stuff. But I don't think that they're gonna mind if I tell you that my P&L here at the end of the day is literally $7.24. Look at all those dots for $7.24. What am I doing? what am I doing? It's just stupid. Not to mention like that I actually could have gotten blown out on that trade and taken a big loss. At one point I was down. At one point, yeah. So my P&L actually be a little bit better than that after I get the rebates from all the liquidity providing I did. But at one point I was up a good amount of money in it, but at one point I was down like $5,000 in the thing. And it's like, what am I doing? What is the point of battling some of these names counter trend when again that better, easier money is just, let me be long the breakaway gap from on the 20th here on a very simple setup that works like literally perfectly, and then have trailing rules in place that could let me be $27.50 in the money a few days later. It doesn't have to be my expectation. The whole point on being with trend or with momentum is that you actually should not have an expectation. Just let it do what it wants to do. Let the trend be your friend. That's how you're going to maximize reward. And then that circles back to one of my key trading principles that I always like to talk about, which is try to find intraday risk for daily chart reward. People, we can talk about risk reward ratios, but I promise you, if you are finding you're still looking at measuring things based on the daily chart for your execution, but you're actually executing on these small time frames, but you're looking for a reward profile of what can my $100 breakout do in this Coinbase, I promise you, you could have come in, I don't remember exactly, but I am very confident that you could have come in and bought coin for, I'm going to say at the most 70 cents risk on this thing, probably less. And then you could be $28 in the money by the end of today. There's a chance that this thing's at 140 tomorrow, and we'll all be fighting it to the short side because we'll all forget today's afternoon meeting by tomorrow. But the point is, it's just the easier money, and I'm a little bit annoyed at myself because it's like I'm so busy, I'm doing so many things, and it's like, yeah, let me sit here and trade a boatload of stock in Coinbase to come away with $7 at the end of it, with potentially losing $5,000 or more because I wasn't even out of the position yet, just for a counter trend trade that inherently has limited reward. I just don't think it's good trading, but it's what I did today, so happy to review that. And I actually think I traded it pretty well, kind of all things considered, and I actually traded, I think, well on the day overall today. But that's it. That's pretty much all that I've got. Is Apple back up? No, it's still down over $1. That's pretty much all I got. I'm happy to answer any questions that anybody has. So if anybody's got any questions, feel free to get them posted. I'm also going to pull up the YouTube on one of my other screens here so I can see if anybody's asking me any questions in there. Here's the link to that YouTube channel. If you don't already subscribe, please do so. All right, so let's see here. Cool. So scrolling up in the VTF, the first thing we're seeing here is from Dave S. Hey Derek, I wanted to ask about inside 5 scalping setups today. I have been trading this setup a lot in the morning, and my success ratio has been very high. However, I left some money on the table towards the end of the morning by not taking the inside 5 and down setup at 9:45 today in the Qs. At 9:45 today in the Qs, that's this break lower right here. The reason being that the way I am trading them is to have my entry be on the break of the candle, okay? And then setting my stop loss at the other side of the inside candle. That's exactly the way that I preach it. The reason why I couldn't take the trade at 10:45 is due to the candle being too wide. That happens sometimes. Sometimes you see a nice trade setup, but you are deeming that the risk itself of that trade setup is too much, so it's not worth it to be involved. As a result, above my maximum allowed risk on any given trade, if I were to use the stop loss selection rule I have for this trade, had I taken the trade, I would have reached max profit for me as the Qs traded back down to VWAP at 1050, which is one of my take profit areas, and would have gotten me flat. My question is this: is this one example of an inside 5 that you don't take as a trade due to it not meeting some of the criteria? Yes. Or is the reversion action that we saw today after the spike at 1032 good to pass up? No. I think that this is a very straightforward answer to this question. If you find a trade, right? So all day we're searching around looking for trades, right? Every morning I post into the VTF my watch list, the trades that I'm looking at based on my morning research. What percentage of my watch list, I don't know the answer to this directly, I don't keep this as a statistic, what percentage of my research morning trade watch list that I post here in the VTF every day do I actually take? I probably would, and this is a guess, 1 out of 8, something like that would be my guess. So why am I not taking the other 7 out of 8? I did all the research in the morning. I found the trade setup based on the daily chart. I did the research. I know about the upgrade or the earnings report or all the details that are potentially coming into this trade. Yet probably 7 out of 8 of my own watch list trades I don't actually take. And that's again a guess. Why don't I do that? It's because as the trade is actually setting up during the day, there could be a number of reasons, but I won't take that trade if some of the layers of probability that I wanted to see on an intraday basis aren't actually there. For example, I don't have volume confirmation. Or, you know what, my trade is finally triggering, but it's triggering at 12:15. And I don't like taking new trades midday because they tend to have a much lower probability of success. Or my trade is triggering exactly how I want it to, except for me, this trade's not worth it if it's more than 25 cents worth of risk and it's 70 cents worth of risk. I'm not taking that trade. So again, I think it's a very straightforward answer. You know, we spend all hours every morning before the market opens as a team, and throughout the trading day, we are searching for trading opportunities. I prefer to be a little bit more selective. If the setup isn't right, if the risk isn't worth it, because that space risk, as you're describing it, is too big, then you don't take the trade. So I appreciate the question there, Dave. Hope I answered it properly. From Rex, I'm trying to get a better way to read the market to improve my trades. This morning I was looking for Tesla to the long side. Okay, this was one of Pat's ideas in the morning meeting today. Was Tesla to the long side if it breaks up. I was looking for Tesla to the long side above both previous day's highs. Tesla was showing relative strength pre-market and after the open. Although Tesla had bad news this morning, it did. regarding the Cybertruck, and my actual inclination on Tesla was actually to the short side. But the way the price action was setting up, once again, I just ended up not being involved in it at all. And I'm agreeing with you mainly off the bad news that was hit this morning on the Cybertruck. But the high volume and relative strength had me decided to take the long trade at 935 when it was breaking up. Okay? So 935 here is when it was kind of triggering through this 238 spot that we were looking at. And I remember we saw and we communicated here in the VTF in the beginning of the day that relative strength actually in Tesla. I used the low of the 935 candle as my stop. It turned out that it stopped you at 940 on the pullback. Sure, and that probably had something to do with the fact that was the time, as when we were just assessing the market earlier, the first half hour of the day is when the market was weakest pretty much all day. I was thinking that the Qs upticked to the 5-minute 8 and 21 EMA on the small time frame at the open, and the daily is still extended. We should expect that there's going to be some resistance at this time, right? Basically giving me times like 935, 940. So even though Tesla's showing relative strength, is it not worth it to take the trade? Or Tesla could drag the Qs up? That's a stretch. Thinking that Tesla's going to drag the Qs up, I think, is a little bit of a stretch. It's more likely that the Qs, at this point, based on what we're seeing from the intraday price action from the NASDAQ, it's more likely that the Qs actually limit Tesla's ability to go up, I think, than the opposite. Could you give me some opinion on reading the market when taking a trade? Sure. So, it's all layers of probability, right? Relative strength is a layer of probability on the side of your long. The market being weak is a layer of probability against your long. So when we're trying to assess risk reward and probability of success, right? Risk reward is relatively simple. It's basic math. How much am I risking and what's my reward profile look like? Where's my stop loss versus where can this thing go? The probability of success portion of it is much more difficult. And that's why I talk about this market in terms of viewing layers of probability. That's what I always say. So all you're describing to me here is one layer of probability that's with your trade and one layer of probability that's against your trade. So what does that mean? Should that mean that you shouldn't take the trade at all? No, not necessarily. Sometimes it's a reason to not take the trade at all, as I was kind of describing earlier on why I might only take, 1 out of 8 trades that are in my morning watch list, because maybe sometimes it's something like that. The market looks like it's going down to me, so I don't want to be buying stock. Or sometimes it's, I'm still going to take this trade, but because I think the market's going to move lower, and yet Tesla's got relative strength, so it can potentially fight that market move down, I'm just going to take it with significantly less risk. So then you're recognizing the lower probability of success. Therefore, if you get stopped out and you have less risk, you shouldn't be really upset about it. It's just kind of the game plan, the appropriate game plan that you established for yourself. But you did take that trade anyway, just in case the Qs hold up. As we know, this range-bound market has made it so that whenever the market's looking the worst, we've been bouncing and moving higher. So there's also a chance that this market holds in and then Tesla's relative strength takes over and that the trade works in your favor. So it's probably worth taking it for a smaller amount of risk is what I would kind of say in sum there. So I appreciate the question there, Rex, and I hope it helps. Scrolling down through the VTF, I am seeing the next question looks like is from Kelvin. Kelvin wants me to talk a little bit about the sweeps that get posted here in the VTF. Sure. Pat could probably talk about it a little bit better than I can, but I can certainly talk about it. So we get a lot of awesome information in the virtual trading floor here, and again, that 90% of that is a shout. 87% of that is a shout out to Pat, and there's definitely some other guys in here who do a great job also helping out with that, like Bill and Dimitri and Anastasia, and every once in a while even Josh can be helpful despite himself. For anybody who's new, we like to give Josh a hard time, but he's a great guy. So shout out to everyone who helps there. But Josh, Pat does this fantastic job of getting this large order option flow in it, and that's important for a number of reasons. A lot of the data that we're able to get, like what I've been analyzing and what Pat's morning note analyzes, which is also something that everyone should read. Pat posts a fantastic morning note at somewhere around 8:30 in the morning every day. It's got a lot of really great institutional information in it. that data that we look at is super important, but it's always at least minutely dated. It might even be from yesterday, but it's still going to be slightly dated. And it doesn't mean that's not important. It certainly is, and we look at it. And that's how we know everything that I was describing earlier this morning. We know about, systematic vol control funds and how they approach the market, and that they need to be buying this week. But we also know that their buying this week is going to be less than last week. That's an underlying demand that's in the marketplace, right? That's really important information. Similar but different, looking at option flow, that actually shows what the institutions, the large players in the market, are doing right now in real time. The bets, for lack of a better term, that they're placing. So if you scroll up in the VTF today and you look at some of the flow that Pat posted, look at the dollar amount of the option flow. And that shows you how big this is. Like I just scrolled up here on the VTF back to 3:40 p.m. Eastern time here, and I just happen to see XLK bearish action. This just happens to be the first one that I kind of see here. XLK bearish action, January 19th. That's the expiration. And the XLK here is the technology ETF. We can pull up the daily chart of that. For $184, the amount of the puts, so they swept puts basically, is $1.98 million. So let's pause there for a second. $1.98 million. I'm sorry, we got some pretty big traders here in the VTF. We even got some guys who are managing funds who are in the VTF. I don't think there's anybody here who is going to be putting on an options position that's going to expire in January for $1.98 million. That's big money players, right? So, or the one right before that, CLSK. I don't even really know this stock. Clean Spark. What is this? CLSK. Wow, this thing has been a momentum name. January 750 calls, so over $1 where it's trading. Basically $100,000 is how much hit the tape. It's incredible. Not as often necessarily in these one-offs. It's actually incredible how accurate we see a lot of this flow is when we go back and we actually analyze it. But it's showing you what the funds are doing now. So it's important for a number of reasons. The first thing I would say is repeat flow is usually the most important. Like if you see the same name getting bull flow over and over and over and over again, we saw a lot of that like back in the bubble of 2021. Then you're basically looking at like those gamma squeezes that everyone was learning about and chattering about back then. There's a ton of chatter about SoftBank like creating gamma squeezes using options for the positions that they already own. To the conspiracy theorists out there were saying that they were trying to manipulate their stocks higher by utilizing the options market. So we got to remember that these bets are not only huge. $100,000 bet for $7.50 in this CLSK. They're not only huge, but they're levered bets. And someone actually has to come in on the opposite side of that trade. This fund that bought that $100,000 of 750 calls in CLSK, it can't just buy that without a counterparty. Who's on the other side of that trade is usually a dealer or a market maker, and that dealer who's coming in on the other side of the trade, they don't want the risk of this thing. They don't want to be the dumb money. They don't want the risk. So what they're doing is, as soon as they are coming in on the other side of that trade, so they're selling the calls to this buyer, they then need to come in on the other side of the market and buy the equity to hedge themselves out. And that buying creates these bigger moves. So it's pretty common when you see like a really big options order come in, and as fast as Pat gets the data in here, and Pat does a phenomenal job doing it, it's always going to be at least a few seconds after the fact that the order actually hit. And the algorithms in the market are obviously extremely fast, but you will see sometimes that options order, fairly regularly actually, move the entire stock. I think we even saw, and I traded so much coin today, I think we saw one bearish option flow in coin during the day today. And I was short at the time, and I had a bid out, and there was a flush down. My bid got hit. I was like, oh, this is nice. And then, like, 5 seconds later, Pat was posting that you know, a bearish sweep had kind of hit the market. I was like, oh, well, that's why my bid got filled, is because of what I just described, except an opposite, right? That the dealers had to come in and hedge themselves by shorting stock on that move, and that shorting stock actually hit my bid because I was already short at that point and was sitting there as a, you know, bidding as a buyer. So I hope that helps to answer your question, Kelvin. This is a lot of the stuff that we like to look at here as a team. It's really good stuff. Bill K here saying, to add to everything that Dio said, the sweeps sometimes say opening, and that can be known because the sweep had more contracts than the existing open interest, so that's notable. And closer dates have more gamma, and thus more delta hedging than further expirations. Thanks, Bill. That's great information. Cool. Dimitri, I kept looking at AMC today to see when it would join the party, just seeing it ripped after hours. Why didn't I buy it as a joke? Did we see something happen in AMC, or is it just because everything else has been ripping? OpenAI is not expected to offer investors a board seat. I'm surprised to see that. Microsoft does not really seem to be moving on it. From Ben Bocus, I bought Microsoft long at 9.39. Let's take a look at Microsoft. Okay, 9.39. So right as this inside bar was closing, I bought Microsoft at 9.39 based on relative strength. It was so strong. It was great, and the daily chart on this thing looks phenomenal. Also, it was cheating a bit on the inside and up as it was forming. I got stopped out of half my position at 115. Okay, so you caught a nice long move. You were trailing it. You got stopped out of half your position at 115. I love the greed here. When it broke your 15-minute trend, I'll just trust you without pulling up a 15-minute chart. But I kept the other half that I was keeping a looser stop on. At the close, I sold half of what remained as a profit cushion and decided to keep the rest. This is beautiful. I'm not sure about this because we talked about how the market could easily correct here, but Microsoft still looks good. What do you think of this swing? I love it. I love it. Don't overanalyze the market. You got a beautiful trade here. Daily chart looks beautiful. You've got a great profit cushion on it. Maybe the market pulls back and it stops you out on it, but like I always say, if you play the what-if game, meaning every time you're in a trade, you say, well, what if this happens, and what if that happens, and what if the end of the world is tomorrow, what if the dollar is worthless, then you will never hold winners ever. So I love it. Don't overanalyze the market. You have a beautiful trade here, executed it well, you were perfectly greedy on it, it closed great, you got a great profit cushion, you're selling some in the close, some during the day, so you're up on it nicely. This is a great job. I love it. Ready, Vic. Since you mentioned generally only took 1 out of 8 trades on your watch list, may I ask if you ever come back to certain tickers after that exit? I'm not sure what you mean by that. How should we form a good mentality to deal with the regret of missing out on the potential gains on certain trades? Usually I have a bad habit of going back to my watch list and checking on the tickers. I screwed up all the time, ended up being super frustrated on bad early exits. Sure, so this question is partially like a technical trading execution question, but it's actually also partially a trading psychology question. You know, you are struggling with, and I don't think this is that unusual, if you either don't take a trade at all or you exit a trade too early and it goes without you, kind of the regret or FOMO or whatever that you left some money on the table, and it makes you want to jump back in at what may potentially be an inopportune time, and then maybe you actually give back some profits as a result. Almost always, you know, I gotta say, the key to bad trading psychology is good game planning and being confident enough in the game plan that you created for yourself, and then being disciplined enough to follow it. So if you had a game plan in place already for that trade, and that game plan was properly designed to maximize reward, and you got out of it as per your game plan, you can never allow yourself to have any regrets on that trade. You created the game plan, you followed the game plan. One thing that you could do after the fact is go and study the game plan that you created for yourself and ask yourself, hey, was this the right game plan? Should I have had a different game plan? Should I adjust similar game plans for future circumstances? But if you actually followed the game plan and you get ticked out of the trade and it moves higher or whatever it is, I mean, even like with Ben's question of Microsoft that we just analyzed, he got stopped out of some stock at 115 here. It was at a low. If he has bad trading psychology, he could look at this close here that is, probably $2 higher than where he got stopped out of, and so, oh my God, I shouldn't have gotten stopped out, whatever. But that's nonsense. He had a game plan, he followed the game plan, and he did a great job. And it doesn't matter what happens next. That's really the right way to think about it. So maybe your issue is that you're not game planned well enough for the profitability side of the trade, and then you're getting out of things too early, and therefore, you're over trading later. That just means that you need to improve your game plan. Maybe you're not following it. Maybe you're creating a good game plan, but you're not following it properly. You're getting out of things too early because you're seeing green on the screen, and then it continues. That's a discipline issue that you have to work on. You need to be more disciplined with your approach and with what you're doing there. But I really think that's the solution to the problem. And don't turn winners into losers. I almost did it today in this coin, even though I preach it all the time. Don't turn winners into losers. It's not good trading. Cool. Looks like I got through everything in the VTF. Let's check on the YouTube here. Gabriel is saying that he thinks that the blackout window is going to be starting around December 8th broadly, so it's good information. From James John, do you always close half your position at one risk at 1R basically? And what is a good stop moving system for the remaining position if trading with the trend? Do I always do it? No. I do it on a lot of the trades that I take, though. And this is the concept. Again, I'm not going to over-explain it just in the afternoon meeting. I have two classes, actually, that cover your two questions here. And overall, those classes that are in my training program, probably I answer your question over the course of like 3 hours. So I'm not going to get into too much detail right now. But I love the idea of covering 50% of my position for many of my trades, not all, at 1-to-1 on my risk, so that my trade is free from a risk perspective. At that point, it's all reward. So I love doing it, but I don't do it 100% of the time. And then, what is a good stop moving system for the remaining position? Sure. So I have 3 rules for with trend trailing of stops. And I follow those rules pretty religiously. I think it's my own system. I think I invented it myself. And I could get into the whys and examples, but I'll just give you the direct answer. I trail based on pivot points. So if I'm in an uptrend's a pattern of higher highs and higher lows, that each higher low that comes in represents a pivot point. I will trail, and what is a pivot point? A pivot point is a spot where buyers take control from sellers, so that makes it technically significant. I will trail by putting my stop loss beneath that pivot point. That's not enough, though. I need that pivot point to be confirmed by the 80 MA, which for me is going to be the upper band of equilibrium in any uptrending stock. So I want it to be confirmed by the 80 MA being at least the price of the pivot. So if the pivot comes in but the 80 MA is well below it, I don't raise my stop to that pivot until the 80 MA catches up to the price of that pivot. So I have to wait more time. And then the third part of the rule is, what's the definition of a trend? A trend's a pattern of higher highs and higher lows. When the new high actually comes in, I have confirmation that that was actually the pivot low of the trend. So I want all 3 things to be there, and then I can put my stop loss at the pivot low. So that is the quick answer to your question. If you want the long answer, get on the team, and you can have access to my training program classes. All right, cool. Looks like I got through all the questions in YouTube and all the questions here in the virtual trading floor. Again, we got some guests that are here this week. Guys, if you're a guest, don't be bashful. We don't let a lot of people in here who are just guests too often. So utilize this as an opportunity. Communicate your trade ideas for feedback. Ask questions, especially in this afternoon meeting. Happy to help everyone be successful, and maybe at some point some of you guys will actually end up officially on the team. So I'm going to end it there. Have a great night. I will see you all tomorrow morning.